Welcome to this explainer. Today, we are unpacking a really highly anticipated event in the Indian infrastructure space, and that's the massive 5,000 crore Cube Highways Trust IPO. This isn't just your run-of-the-mill public offering. It's actually the very first time an Indian infrastructure investment trust is making the jump from a privately listed vehicle to a fully public one. So whether you're looking for a smart place to park your money or you're just genuinely curious about how everyday investors are getting a piece of India's growth engine, you are absolutely in the right place. We're going to dig straight into the prospectus, decode the numbers, and figure out exactly what this offering is all about.
Here is our quick roadmap for today. We'll meet Cube Highways, overview their road portfolio, dive into the IPO deal details, run through the financial health, weigh the strengths against the risks, and wrap up with a final verdict.
All right, Section 1. Meet Cube Highways Trust and decoding the InvIT.
Let's just quickly set the stage here. Cube is an InvIT, which stands for Infrastructure Investment Trust. You can think of it kind of like a mutual fund, but instead of buying stocks or bonds, it pools investor money to own, operate, and manage actual operational infrastructure assets. In Cube's case, they operate on a public-private partnership, or PPP model. That essentially means they are working hand-in-hand with the central and state governments to manage highway concessions. The main goal for you as an investor? It's all about those regular, stable yields generated from the cash flows of these massive infrastructure projects.
And rather than just staring at spreadsheets all day, it really helps to remember that an InvIT represents tangible, critical national infrastructure. When you invest in Cube, you're essentially taking a stake in the scenic toll plazas and vital highways that millions of Indians drive on every single day. You're literally buying into the physical connectivity of the country.
Now, Cube was formed in 2022, but don't let that recent date fool you. They're not just some newcomer trying their luck. They bring world-class credibility to the table. Just look at the heavyweights backing them. We're talking globally reputed institutional investors like I² Capital, the Abu Dhabi Investment Authority, British Columbia Investment Management Corp., and the Mubadala Investment Company. Having this tier of international capital already locked in speaks volumes about the strict governance and high asset quality standards they operate under.
Moving on to Section 2, the road portfolio overview and the sheer scale of this operation. Our first big anchor number to keep in mind is 27. Cube operates a highly diversified portfolio of 27 distinct road assets. And they aren't all just clustered in one tiny region. They span across 12 different states and one union territory. That geographic diversification is absolutely crucial because it means the trust isn't heavily reliant on the economic health or local politics of just one specific part of India.
To really wrap your head around the physical footprint here, those 27 assets cover a massive 8,819 lane kilometers. Keep in mind, India currently holds the status of having the second largest road network in the entire world, and the government is pushing aggressively to monetize these assets to fund even more development. With nearly 9,000 lane kilometers already under its belt, Cube is in a prime position to capitalize on this ongoing national infrastructure boom.
Let's hit Section 3, the IPO deal details, as they transition to the public markets.
Here are the vital stats you need for the deal itself. We're looking at a very sizable 5,000 crore rupees issue. The price band is set super tight, right between 151 rupees and 152 rupees per unit. The window to subscribe opens on July 22nd and closes on July 24th, 2026. But here is the most critical detail you need to catch. The issue type is 100% offer for sale, or OFS. That means no net new money is actually going into the trust itself to buy new roads. Instead, the entire 5,000 crore rupees is going toward providing an exit for some of those existing private unit holders we talked about earlier.
All right, Section 4, financial health and valuation. Let's run the numbers.
The financials definitely show some really strong momentum. In fiscal year 2025, the trust's consolidated income grew impressively to over 34,500 million rupees. Even more impressive is the profitability at the operating level. They are boasting a robust EBITDA margin of around 69%. And for the income seekers out there, which, let's be honest, is the primary audience for an InvIT, they delivered a very healthy distribution of 11 rupees per unit in FY25.
Now, if you dig into the historicals, you'll spot a recent transition from a net loss to a net profit. If you're a traditional stock investor, seeing a net loss in recent history might totally spook you. But in the infrastructure and roads sector, this is actually pretty standard. Massive initial depreciation on these physical assets often masks the actual cash flow generation in the early years. As those assets mature and depreciation normalizes, that strong underlying cash flow finally starts shining through as net profit, which is exactly the inflection point Cube seems to be at right now.
So, all that leads to the ultimate question. Is 152 rupees a fair price? When you evaluate an InvIT, you look closely at the net asset value, or NAV. The 152 rupees asking price definitely represents a premium over the March 2025 NAV, which stood at 133.82. However, markets are always looking forward. If you compare the asking price to the projected December 2025 NAV of 142.70, that premium shrinks considerably, making the whole thing look much more reasonably priced based on near-term expectations.
Section 5. Strengths versus potential risks. Let's balance the scale.
On the strength side, Cube is built like a fortress. You've got inflation-adjusted revenues, meaning as general prices go up, toll collections usually rise too, which protects your yield. They also have a massive average remaining lifespan of about 19.44 years for their cash flows, completely backed by a rock-solid AAA credit rating. But we have to balance that against the risks. The absolute biggest variable here is traffic volatility. If commercial activity slows down, fewer trucks pay tolls. It's that simple. Also, InvITs are notoriously sensitive to interest rates. If bank rates go up, the relative attractiveness of an InvIT yield goes down. And yes, historical data does point to a lower return on equity in the past, though as we just discussed, depreciation plays a huge role there.
Finally, Section 6. The final verdict and disclaimer. The bottom line.
Based on the overall analysis of the source materials, the definitive takeaway today is to subscribe with caution. This is an asset perfectly suited for long-term income seekers who are out there looking for stable, inflation-beating yields to anchor their portfolios. What it is not is an asset for aggressive traders looking to double their money on a listing day pop. You're buying a mature, cash flow-generating utility here, not some hyper-growth tech startup.
As the Indian government continues its super-aggressive push to monetize vast infrastructure assets across the nation, it really leaves us with a provocative thought. Are InvITs, like Cube Highways, destined to replace traditional fixed deposits and become the new foundational building blocks of everyday retail portfolios? The sheer scale of this IPO certainly suggests we might be heading in exactly that direction.
Before we wrap things up today, please keep this in mind. This analysis is based solely on the uploaded IPO documents and is intended for educational purposes only. Investors should conduct their own research or consult a qualified financial advisor before making any investment decisions. Thanks so much for joining me on this explainer, and I'll catch you on the next one.